Good morning, Keller Williams, Greater Metropolitan, and welcome to our monthly Wealth Mastermind. I'm so excited about this month's installment because we have a topic that should hopefully be important and relevant to all of you, but also is a great way to improve your buyer pipeline. Right? There are a lot of things that get in between a buyer and the American dream of home ownership. And one of those things can be their credit score. And it's not just that it's got to be good enough to qualify, but when we look at what Shay's going to take us through today is related to credit repair, we can improve our clients' rates by helping them improve their credit. So in an environment that has higher rates than we've seen in a while, in an environment where the rates could potentially go up, this can be hyper valuable to strengthening your buyer pipeline as we move through 2023. Now, what do I know about credit repair? Nothing, which is why we have asked our very talented agent, Shaniquea Jackson, to be a part of this month's Wealth Mastermind. She is making her KWGM training debut today, but she has a wonderful business in real estate and has recently incorporated and started a business exclusively for credit repair. And so I'm sure that while this is the first time she is going to be leading a discussion amongst our agents, it will not be the last. So I'm going to stop flapping my gums and turn it over to Shaniquea, who is going to take us through her presentation and help you guys make the most of the upcoming market.
Awesome. Okay. Hello, everyone. I'm just going to share my screen really quick. All right. All right, so let me put this over to the side really quick. I guess, okay. All right, so hi, everyone. Again, my name is Shaniquea Jackson. I am the owner, CEO of High Class Consulting, which is my business. And I appreciate you guys coming in today in order to listen to me talk about establishing and repairing credit. Because it's super important, especially just like what Mike said, especially with like where our economy is going with interest rates. And I know like a lot of our buyer clients, they want to know like, you know, how can I get the best interest rate? How can I get into the best programs, you know, things of that nature. And a lot of it is dependent on not only, you know, whether or not they have the financing backing them, but also on, it's dependent on their credit. So you're going to get right into it. All right, so again, my name is Shaniquea. I started my business because I saw a need in the market, especially with like how we have been seeing like where interest rates are going. And I wanted to see like how I can help my clients. Not only have I experienced it with my own clients, where so they, you know, they may have not been properly prepared when it came to their credit, but I also saw it when it came to myself. You know, I am not only a product of my services, but I experienced it when I was purchasing my own home. So I was like, so I just started to really get invested in learning the ins and outs of repairing my credit, what I could do to strengthen my credit, and how could I just, you know, get the best results, basically. With my company, we dispute collections, bankruptcies, charge-offs, student loans, late payments, and more. You know, our team analyzes, you know, because I have a team. So we analyze like different just aspects of the client's report, just so that we can align our goals with theirs. Being a real estate agent helps as well, just because I understand like what is needed in order for, you know, in order for buyers to put themselves in the best position when it comes to being eligible for the different loan products that lenders have to offer. So yes, it's a great opportunity all around. All right. All right, so getting right into it. Just like anything else that we, you know, do, that we put ourselves into like a position where so we're trying to learn something new, or, you know, we want to evolve as people. we have to put ourselves in a position where we're shifting our mind, right? So that's like the first place that I wanted to start when I wanted to talk to you guys about credit. Because little do you know, you've always been in a position where as to you are getting prepared for your, to be 18 and to be an adult and to be eligible for what credit has to offer you. Okay. So this example right here is basically showing you guys, like, you have to think about it like school. Okay. When you think about a credit report, think about your report card. All right. Because it's kind of like the same concept there. Like all of the years that you went to school, you were building a history of like learning and growing, right? It's the same thing when it comes to your credit report. With a report card, you have a grades, you have like standards when it comes to your grade. You have 60% is considered a D, anything below that is an F. You have a 90% and higher is considered an A, right? So it's the same concept when it comes to your credit report. All right. Think about like everything that you went through school. Think about it as an adult. Think about it like, your credit report is the same exact thing. With a credit score, the lowest credit score you can be at is at a 300. The highest credit score you can be at is an 850. All right. And as you guys see just from this chart, it does range from very poor credit to excellent credit. All right. And we know that when it comes to your eligibility, when it comes to certain loans and, conventional loan, FHA loan, there is a particular score that you actually have to have in order to be eligible for that particular loan. So just shift your mindset, know that this isn't something that's necessarily new to you, because you've always you've been prepared in a sense. You may have not necessarily been taught it, but like verbatim, like someone's telling you about credit, but you definitely have been prepared for it if you change your mindset about it. All right, so we can't talk about establishing credit without talking about what your actual credit consists of. Okay, so if you guys have questions or anything throughout it, please let me know, because I want this to be interactive as well. And if I'm like going too fast, please stop me, just because I can go on tangents. All right. But so there are 5 categories of credit, okay, that makes up your actual credit score. Now, I told you guys that when it comes to your credit score, it ranges from a 300. 300 is the lowest credit score that you can have. 850 is the highest credit score that you can have. So there are points in between, which you see here, 550 points that are in between those scores, in which you have to work with, that involves your credit score and your the different credit categories. All right. So just looking at this this pie chart here and seeing like how everything is weighted, I'm just going to go a little bit in depth about it, just so that you guys have like a really good understanding. So when you first start out with your credit, like I said, there's 5 categories. The first category that we're going to talk about is the amount of debt. So 30% of your credit score revolves around the amount of debt that you actually have. So this is actually you can have a lot of debt. I see people have mortgages, you have, car loans, student loans, credit cards. This 30% actually talks about the utilization. Okay, so the 30% is actually what you're actually utilizing, okay, when it comes to your debt. 30% when it comes to the categories really can be determined by how you're utilizing your credit cards. That is really where where this category is controlled by. It's controlled by how you're using revolving lines of credit. The next tier, I guess the next category of credit would be your payment history. Now, as you guys see, payment history is 35% of your credit score. So that's 192.5 points. It's super important that we're paying our bills on time. We're not doing any, having any late payments, because when you have a late payment, your score can drop as much as 80 points right there. It's crazy how I guess you do benefit from doing the good thing and, keeping up with your finances and everything when it pertains to your credit. But as soon as you do something as far as have a late payment, you will see your credit score go down drastically. And you see that this is heavily weighted when it comes to your credit score. Lenders, banks really want to know that, one, they want to know that you're not dependent on credit. They want to know that you're not dependent on them. They want to know that you're able to pay them back. So you see the two categories when it comes to amount owed is 30% and your payment history is also 35%. It's weighed heavily because they want to make sure that you are credible. All right. Your credit score is basically a credibility score. All right. So the better your score, the more credibility you have. All right. So next we're moving on to credit mix, which is the types of credit. Credit mix is like worth 55 points. Credit mix is basically showing like the different lines of credit that you do have, like installment accounts, revolving accounts. Lenders want to see that you're not only able to handle one type of debt. Okay, so it's super important that you have like a well-rounded credit report because it lets them know exactly what you are capable of when it pertains to funding or whatever, like they're willing to lend you, whatever you're applying for. They want to know that you're able to not only handle credit card debt, short-term debt, long-term debt. They just want to make sure that you have like a well-rounded credit report. So new credit is 10% of your credit score. All right, that's also 55 points as well. So if you guys, like a lot of people, and especially when it comes to my clients, I'm not sure about you guys as clients, but I have a lot of clients who are always nervous about like applying for more than one lender, applying to more than one lender. They always get nervous about like how many inquiries that they're going to have because it affects their credit. Now, this category of new credit, it does deal with inquiries. That is new credit, you know. Now, if you look at inquiries and you look at like being approved for a credit card, the inquiry and not being approved for a credit card hurts you more than having an inquiry and actually being approved for the credit card. The reason for that is because when you get like a new credit card or you get a new loan and you begin to pay on it and you begin to pay it down and things of that nature, like it offsets itself. And if you think about it in this way as well, like whenever you apply for a credit card and you have like a new line of credit, it helps when it comes to your utilization because the higher limits that you have and you have like limits currently on your credit cards, the lower your utilization. So it kind of offsets things. But if you do apply for something, and we know when it comes to loans, like within the first 30 days or so, like when you are shopping around for, approvals and getting approved for a mortgage, it doesn't hurt you as bad as counted as one. However, if you're doing that and you're doing it with like shopping around for a vehicle loan, it hurts you because it's not the same type of debt and it's not weighted the same, if that makes sense. But that's what new credit is. So length of credit history. Length of credit history is 15% of your credit score. Like a good starting length of credit history is about having 5 years when you're really like in your beginning stages and you want to start applying for things like, you know, I guess like bigger lines of credit, things like that, other than credit cards. 3 to 5 years is actually pretty good. Typically banks want to know how well, you know, you have handled debt in the past. You know, how well are you with your finances? You know, so the longer you have actually held like a history of credit, the better for you. All right. And this is something important to notate, just because I know like a lot of my clients, a lot of my friends, family, they think about the fact that they have like student loans, when in all actuality, student loans are typically the longest line of credit or the longest account that is reporting on someone's credit report. And it's actually helping them because of that history. Okay, so don't look at it as a negative. Look at student loans as actually like they're actually helping you. Okay. All right. Okay, so building credit from scratch. All right, we're just building credit from scratch. If you don't have a credit score, or if you you know, you're kind of struggling with your credit, these are like some good takeaways to take for yourself in order for you to just take into consideration where you want to be when it comes to your credit. Okay. So the first thing you want to do is you want to start a relationship with the bank. The reason that you want to start a relationship with a bank is because if you start a relationship with a bank, like not only are you opening the door to lending, to funding, to having the opportunity to apply for mortgages in the end, you also want to have a relationship with a bank, because in order for you to apply for a credit card, the first thing that they ask you is, do you have a bank account? You should have a bank account. I've had clients in the past who, they and even family members who they didn't have bank accounts. What they had was accounts like Chime, like neobanks, which are not like regular financial institutions. You want to build a relationship with a bank that's going to take you further. If we notice, I don't know if you guys notice, but well, I'm sure you guys have, but I've experienced a lot of clients who, will get a loan through their bank. Like I have like Chase Bank. I'm sure that we've all hopefully worked with Chase Bank, but when you open an account with a bank, they're your first go-to when it comes to lending. They see everything that you're doing when it comes to your finances, like what's being deposited, what's coming out. They're actually seeing how you are utilizing your funds and what you're keeping in the bank. I do recommend using credit unions, because credit unions are more so relationship based, and they tend to give you larger lines of credit when it comes to applying for credit cards and things of that nature. So it's nice to use credit unions, and they're more favorable too when it comes to their rates as far as what they offer you. If you are in a excuse me, if you are in a position where you don't have any type of credit cards, or you or your clients have ever experienced not doing too well with a credit card, okay? You can get a secured credit card. The great thing about a secured credit card is that it's backed by your own money. That's what makes it a secured card. Secured credit cards show up as revolving lines of credit. Again, like I told you guys, using credit unions, going to different financial institutions like a PNC, a Discover card. They have great secure cards that you can use, and it shows up as a credit card. The reason that you have to have a credit card is super important. You can have good credit by doing other things, but it's super important that you do have at least one credit card, because this is how you get that 30% when it comes to your utilization and in the amount of debt that you actually use. As you guys saw, that 162 points from your credit score revolves around just utilization alone. And the way that you can control that is by using a credit card, okay? Another great tip is become an authorized user. Becoming an authorized user on someone's card, you become an authorized user on their credit card. This is something that one of the first steps that I took when I actually started my credit journey, when my credit turned real bad. My credit went very low, and I started looking into different opportunities in order for me to increase my credit score. And luckily, by the grace of my husband, he allowed me to become an authorized user on a few of his credit cards. This is considered piggybacking, okay? So not only are you piggybacking off of their history, you're also getting that line of credit as well. And just make sure whenever you become an authorized user on someone's account that they are responsible, that they are not dependent on that credit card, because their utilization rate is your utilization rate. Their payment history is your payment history. And when you are in a position where you are trying to establish credit and you are trying to repair your credit, you don't want anything to hinder that process. Okay, so it's super important that whenever you ask to become an authorized user on someone's account, that you take that into consideration, how responsible that person is. So a safety net for the person that you are actually asking to become an authorized user is that they still have control of their card. They do not have to give you a credit card, although you are an authorized user, and they can actually limit the amount of money that you have access to, just in case. So that is two super important things if you're thinking about asking someone to, could you be an authorized user on their account? And this is one of the easiest free ways. No hard inquiry, nothing hinders you from, for getting approved, all right, for being an authorized user. So What I recommend, if you've already had like a credit card in the beginning, like say you get that secured credit card and you're using it, like you don't want to establish too much new credit in the beginning, especially when you are just starting off. But it is important that I say that you have at least 2 to 3 credit cards. So if you are in a position where I see you can apply for a second beginner-friendly card, apply for a second beginner-friendly card. But if you're like kind of eerie about credit cards, you don't have to do that. You know what I mean? Use a secured credit card, introduce yourself to like being responsible, budgeting, trying to figure it out. But I do recommend that once you have a secured credit card, you see progression with your credit score, then applying for a second beginner-friendly card is something that you should do. And you can do it within like 6 months, say after the first 30 days of having that secure credit card, you should see some progression in 60 days, like when it reports again. So depending on circumstances, feel free to apply for a card, because when you got that secure credit card, you shouldn't have received a hard inquiry. And not only that, but typically you can go through a pre-approval process when it comes to getting a secure credit card. There's no hard inquiry involved at all. But there's other options when it comes to getting secure credit cards, where so you don't even have to go through a pre-approval process. All right. Next, you want to, if you are able and eligible to do this, apply for an installment loan. I know like a lot of people don't like they talk about debt, and they talk about like having well, a lot of people I listen to at least talk about having debt, and they talk about like installment accounts when it comes to car payments. These are actually like, these give you a credit mix. All right. So this helps when you apply for an installment loan, it helps you with your they're usually pretty lenient when it comes to the approval. What I do recommend is that you go to a I'm sorry, am I still okay? My internet just said it was kind of all right. So what usually when it comes to installment loans, what I do recommend that you do is that you actually apply with a credit union. If you apply with a credit union, not only do they give you higher limits, so if you have like Navy Federal, have there's one over here, and I think it's like Catholic, Central Catholic, something like that. I have to get the name, but they'll approve you for a loan. They're more, like I said, credit unions are more favorable when it comes to relationship based. Navy Federal, typically they have their own internal scoring model, opposed to using out like the regular FICO score. All right, so just know, get an installment loan. Continuously report a low utilization. Okay. When you are establishing credit, and when you are in a position where as to you are, trying to apply for something, you want to continuously report low utilization. Reporting no utilization, it does not help you. So when you pay off your credit cards completely, this actually isn't helping you in a sense. Okay, because you still want to show like the bank and lenders that you're responsible you're responsible with utilizing like the credit that you have, but at the same time, like you don't want to seem dependent, and like I said, utilization is like I would say it's the only category that you really have the most control over. Now, just to kind of give you guys some tips when it comes to credit cards, and when we're talking about utilization and you have a credit card, think about like your statement. So for those people who actually have credit cards, and for the people who are thinking about purchasing credit cards and they don't have one yet, you have an open date and you have a close date on your credit card statement bill. All right. If you pay down your balance by that statement date, that is going to be the balance that's reported to the credit bureaus. A lot of people get it misconstrued when it comes to the due date. Now, the due date is just the date in which you have to pay back debt in order for you to not, be late when it comes to the actual creditor who holds that line of credit that you have. So you're paying the minimum by the due date. Also, you're avoiding fees by doing so as well. But if you pay down your balance by the statement date, which usually comes out 15 days, which usually is 15 days prior to your due date, then that is going to be the amount that's actually reported to the credit bureaus. All right, so know this, because that is the way that you are controlling what is being reported to the credit bureaus in order for you to increase your score. Something else that's important as well when it comes to paying off credit cards is we're talking about wealth building. So we want as much money as possible in our pockets. We don't want to constantly be dishing out money. We want to get money, right? So when you pay off your credit card by the due date, you are avoiding interest. So from your statement closing date, whatever is due from the amount of debt that you are using up until your due date, if you pay the balance in full, you are not paying interest back. Okay, so that is a great way for you guys to, save and for you guys to avoid paying interest. All right. But again, continue to use your credit cards. I use more so my credit cards for everything. I don't like to use my debit cards because I like to use OPM, other people's money, when it comes to my credit cards. Another thing is pay your bills on time. Pay your bills on time constantly, like you don't want a late payment. As I told you guys before, one late payment can sink your credit score 50 to 80 points. You don't want that to happen. So don't have any late payments. Be responsible, pay your bills on time. Just be responsible. All right, so this just goes into the types of different credit, the types of accounts you actually have access to when it comes to accounts that are actually reflecting on your credit report. Okay, so you have revolving accounts, which are credit cards. These accounts allow you to borrow up to a certain credit limit and make payments on a revolving basis. I love credit cards. I love it because, when just kind of thinking back when it comes to real estate, right? When we think about real estate and we think about, say you have the option to do a cash out refinance, or you have the option to do a HELOC. The thing about something that's revolving is that you constantly have access to that line of credit, right? Whereas so you can pay it down and then you can reuse it again. And as I said, revolving credit accounts allow you to manipulate your credit score when it comes to the utilization. This is an easy way to get points. But I love credit cards. You want to have a credit card that's imperative when it comes to building your credit. Installment loans. Installment loans, these are, paid back in a fixed amount. Like I told you guys, when it comes to car loans, personal loans, student loans. Again, let your clients know when it comes to student loans, it's not a bad thing. Some people feel like sometimes you'll be the first point of contact before they actually go to a lender, and they'll talk to you about like their whole life story when it comes to their finances. And, oh, I have this student loan, I have this, and that. I had a conversation with a lender, and he was telling me like, a lot of his clients, well, not his clients, but, a lot of people think that when they're deferring their loans, that is actually a good thing, but actually putting your loan on a payment plan can actually help you when it comes to becoming eligible for a loan, so like talk to them about the ins and outs of what that could look like, because when it comes to conventional loans and you have a student loan, typically in order to be approved for a mortgage, you have to and you're not paying on that student loan. They take into consideration, I want to say it's 1%, of that student loan going towards your debt to income ratio. And with FHA, I want to say it's 0.5% now. 0.5% now. But yeah, you guys talk to your clients about these types of things, because these are the types of things that will help them. And again, the history of having it helps a lot as well. Just to have it continued, mortgages, it's like a large amount of debt. This shows that you're capable of handling large amounts of debt. And the great thing about the types of accounts that you have on the personal side, it really once you get to the business side, when it comes to lines of credit, credit cards, and things of that nature, you're so well versed and well rounded when it comes to being able to handle larger lines of credit. You know, that when it comes to your business funding, you know, that the possibilities are endless and the amounts of credit that you can actually receive is endless as well. Retail accounts. So retail accounts are store credit cards. You want to be careful with store credit cards. From clients that I've worked with, I see a lot of them like have store credit cards, and they end up closing the account. They end up overusing these accounts, whereas they are maxed out, and they just let the accounts go. You know, with store cards, retail account cards, you want to be careful with how many cards that you actually receive, because you kind of limit yourself, you know, to just that store, unless you're like me and you apply for a Costco credit card, a Citi Visa, and you're able to use it everywhere, right? You're able to you get cash back benefits, you're able to, you know, get warranty benefits, things like that, and you're able to use it just about anywhere. And you're okay with going constantly, keeping a membership there, or constantly going back and shopping there. You know, so it's important that when it comes to retail accounts that, you know, you're going to utilize that, you know, that you're going to utilize that store often, okay? But also, you want to take into consideration that typically store credit cards do not give you large lines of credit. They don't give you that much credit. So you kind of are limiting yourself to opportunities when it comes to other great credit cards. Other accounts that can show are utility bills, phone bills, rental payments. You want to be careful with this, just because when it comes to these accounts reporting, and you also want to tell your clients about this. And I've had in the past, like I've used the Experian Boost as an option, and they reported a phone, like it was a cable bill. They reported a cable bill on my credit report. Now the cable bill had been paid, but it never had been updated. It was like $300. Now, and this was around the time where I was applying for a mortgage. I needed that $300 removed from my credit report in order for me to, you know, continue, like, to have a good debt to income ratio at that time. At that time, I told you guys, my credit was not the best. My husband and I was going in on that loan together. And I had to kind of figure out some ways in order for us to, like, you know, get approved and go through that process. You know, so just be careful when it comes to like talking about things like Experian Boost, because a lot of times they're reporting accounts that really don't even matter and really are not weighted as heavily as other accounts that's reporting. All right. So be careful about that. All right. So let's get into my favorite credit repair. Okay. Because this makes all the difference of the mistakes that we have made in the past and where we are going. All right, so let's get into it. Okay, so the first steps that you want to take when it comes to repairing your credit, especially if you're doing it yourself, is you want to pull your credit report for free from annualcreditreport.com. You'll be able to pull your Experian, TransUnion, and Equifax report. You will not get your scores, but you are able to have an overview of your actual report, okay? After you pull your credit report, you want to open free accounts with Equifax, TransUnion, and Experian. This is optional. However, I recommend it because it's a great opportunity for you to actually see what is going on with the different bureaus and what is actually reporting. Here too, you do have access to your credit reports. However, it's not in the same, it's not lined up exactly the same as you would see it with annualcreditreport.com. And then you actually get like a physical version where you can download it, you can print it. You can also request this online. So you can request it online, you can request it over the phone, and you can also request it through the mail when it comes to annualcreditreport.com. So it's great to have, but then it's also good to have opened these accounts with Equifax, TransUnion, and Experian, because if you are doing it yourself as far as like repairing your credit, one, I highly recommend that you do not do anything online. Do not do any disputes online, because you basically give away your rights when it comes to like if you have to take things further because the credit bureaus aren't doing what they're supposed to do when it comes to opening an investigation for you. When you are repairing your credit, think about you guys being attorneys in a sense. However, you're not going to court, right? But you want to keep a paper trail, right? You want exhibit B, you want all these exhibits. And all these exhibits are the letters that you actually wrote and you sent certified, okay, to the credit bureaus. So you want to have a track record of exactly what you're doing. Now, the reason that you open Equifax, TransUnion, and Experian accounts is because although you are sending your disputes to the credit bureaus certified, once they actually receive your disputes, you are able to actually track whether or not like they've received it and whether or not they have opened your case. And you'll be able to track that through Equifax, TransUnion, and Experian by having those accounts open. All right, so after you've done that, you want to identify any adverse information reporting in the personal section of your credit report. This is something that is overlooked a lot when it comes to just anyone who's like repairing their credit and trying to do it themselves. It's super important that on your personal section, that any old addresses, any misspelling of your names, any old job history, things like that, that you actually, you discover and you request to get those removed. The reason that we want to do this is because whenever you are, doing a dispute, whenever you're sending out disputes, you don't want anything to come back verified just based off of them having a misspelling of your name and an old address or an address that's not even yours, on there. So just be very, very cognitive when it comes to that. Dispute your personal information, super important. And then two, you want, when lenders are pulling your credit information, they see your personal information. You want to have like a clean credit report, including your personal information. And you don't want all of this job history coming up because you want stability. You don't want all these addresses coming up because you want to show them stability as well. All right. This is super overlooked, but it's super important. Identify the derogatory accounts. So you want to look at your credit report. You want to identify the charge-offs, the collections, bankruptcies, late payments, etc. Anything that is negative, you want to identify, and you want to see, you want to highlight that as you're going through your credit reports. This is why I encourage you guys to pull your credit report from annualcreditreport.com, because when you pull it, you're able to have everything out in front of you and you actually have a physical copy of it, and you're able to analyze each credit report in front of you and you can compare what information is reporting. Okay. Now, according to the Fair Credit Reporting Act, it's super important that everything is reporting accurately. Okay, across the board. If you see any inaccuracies, that is your opportunity to, build up your case and dispute. Okay. Compare the information reported on each derogatory account with each bureau, ensuring that the information reflects the same across the board, as I just stated. Okay. All right, so luckily a client of mine allowed me to show you guys an example of their credit report. All right, like this is just an account reporting on their credit report. Now with I have credit report, I have software that I use when it comes to disputes. So this isn't exactly what you guys will receive when it comes to pulling your credit report. However, it's important that you have a personal section. You also have like the accounts that you actually have section. You'll have a closed section underneath every account. So you'll have like revolving accounts that shows, and then like the closed credit cards underneath it, which could have derogatory remarks on there. You'll have the installment loans section on there that is reporting on your credit report. You have public information, where so you see judgment liens and bankruptcies. You have an inquiry section, and then you also will see like the soft pulls that are on your credit report. Soft pulls, just know that they do not affect your credit report. Hard inquiries do affect your credit report. And you also want to ensure that when you receive your credit report, all the accounts that are actually on your credit report, at the end of there, you will see the actual contact information of the creditors, the actual credit furnishers, collection agencies as well. They should be reported in there. So it's super important that you guys know that. So talking about this credit report. So as you guys see, what I have highlighted here in red Like this talks about basically factual disputing. And this is a method that I actually use when it comes to disputes. And this is a method that I encourage you guys to use because it's the most honest method. You're not lying. You know, your credit report should show that it is accurate across the board. So it's super important that, you know, you guys look at these inaccuracies. Because, you know, one mishap that is, say you open an investigation with the credit bureaus and they said that they investigated the accounts. However, they didn't update anything or they didn't remove anything. You know, you have proof right here that this account is wrong, you know, so the next letter that you basically saying is you asking for a method of verification. How did they verify this? And you want to know because nothing was updated. You have proof right here. This is wrong. You know, so on this account, you'll see that the account number is wrong. It's not reflecting the same account number up top across the board with TransUnion, Equifax, and Experian. You see the date opened is incorrect. You know, it's reporting correctly on 2 accounts, but it's not reporting correctly on the rest of the accounts. The close date isn't even reporting on 2 bureaus, but it is reporting to 1 bureau, you know. When you look down, all the way down at the payment history, you see that it says unknown, you know, that is, you know, like, well, is it being paid? This isn't a reflection of me as a consumer, especially when it comes to my credit reports being pulled for me to, you know, get a proof or something. This isn't a good reflection of my account, you know, so you can dispute. So like I said, I use factual disputing, you know, and you can factually dispute because these are facts. These are actually inaccuracies that are on your report. And this is the easiest way to get certain things removed. And, you know, it's the crazy thing is that this not only helps you when it comes to derogatory accounts, but if you have a positive reporting account and it's not an actual reflection of where it's supposed to be, it can be removed as well. But just so you know. Okay, so as I told you guys, when it comes to you disputing, these are the biggest 3 credit bureaus that we know of that we utilize: Equifax, Experian, and TransUnion. This is their mailing information. This is their contact information. As I said before, you want to mail letters because you want a paper trail. You do not want to dispute online. Okay, just don't do it. When you are disputing, you want to make sure that in your letter, this is what you include. You include your name, your address, each mistake that you want fixed and why, and you want to give them direction on what you want done with that account. So if it's like a late payment and you are actually not late on that payment, you want to say, can you update this account? If you want the account deleted because of multiple inaccuracies that you see on there, ask them, can you delete this account? You want to give them a call to action, okay? So make sure that you indicate that whenever you are, you know, forming your letter and you're indicating certain accounts on there. You want to give copies of documents that support what you are requesting. So one way that I was able to get like a late payment removed was that I had an actual not a bank statement. I had an actual statement from that month that showed that I paid my bill on time. I sent a copy of that with a letter to the credit bureaus, letting them know like that this information was inaccurate and they actually updated it. You know, so having documents and having proof as far as like communication between yourself and creditors, that allows you to get things removed off of your credit report, and it also allows things to become updated on your credit report as well. Along with your letters, you need to have identification because they have to know that it's coming from you. So you want a copy of your driver's license or a state identification card. You also want address verification, so a recent utility bill, bank statement, pay stub, W-2, et cetera, in order for you to show proof of address. It is okay if your driver's license address is different from the address that you are sending with the utility bill, because again, according to the Fair Credit Reporting Act, nothing can be like misleading, inaccurate information, old data. It should not be on there. It should be updated, and you have proof by sending those documents. All right, so let's talk about resources. So these resources are great for you to utilize and great for you to look into as a consumer, because there are consumer laws that back you when it comes to you trying to get something removed from your credit report, or even when it comes to identity theft. It's super important that you know these things. So the FCRA is the Fair Credit Reporting Act. These are consumer laws that you have that the actual credit bureaus and also like financial institutions have to follow in order for them to be in compliance. Okay, so the more you know when it comes to the Fair Credit Reporting Act, the better for you. Because when it comes to disputing, I use Signature. Like I have important consumer laws for disputing that I actually use that helps get certain things removed based off of the inaccuracies that's on there. The FDCPA is the Fair Debt Collection Practices Act. This is something that's used for collection agencies. They have laws that they have to abide by in order for them to also be in compliance and in order for them to, not get sued. So they have to make sure that they are following those practices. The FTC is the Federal Trade Commission. So if you ever have experienced identity theft and you need certain things and you see certain things that are reported on your credit report that are not you, that you've never done, and it was the same when it came to, I'm not sure if you guys know about how some people were getting their identity taken and actual unemployment was, taken out in their name, but you would go to the FTC in order for you to file that complaint in regards to that, and now they have it on record, and you can also, once you file that report, you're able to also send it to the credit bureau just in case like some accounts were open in your name. The FDIC is the Federal Deposit Insurance.
Oh my gosh.
Huh?
No, you was right though. It's multiple over there.
Hello? Hello? Okay. All right. So the FDIC, the Federal Deposit Insurance Corporation, they back the banks. And not only are you able to file complaints if anything goes further, but the FDIC, if anything happens with a bank in which like you need to file a complaint, a credit card, they're not doing what they're supposed to do, or, they're not removing a late payment and you have proof that you paid certain things, you can file a complaint with the FDIC. The CFPB is the Consumer Financial Protection Bureau. If the credit bureaus are not doing their job and following the laws that aren't put in place as far as the procedures that they're supposed to actually take to open up an investigation for you on your behalf, you are able to file a complaint with the CFPB. And again, like I say, you have that record from the letters that you've sent, and you're able to plead your case to them in order for you to get results. So these are super important. This is super important information if you guys want to take it a step further as far as information you want to learn. And if you want to DIY it, do it yourself. All right, so this is the end. I hope that this was like very insightful for you guys. I want you guys to know that if you are repairing credit yourself, do not quit, because, you can go round for round when it comes to the credit bureaus, back and forth, letters being sent, but do not quit, okay? It's super important, stand your ground. But if you can't do it yourself, contact High Class Consulting, contact me, and I'm more than willing to assist you guys, give you a free consultation to go over your credit report. If you have additional things that are reporting on your credit report, such as, like I said, charge-offs, collections, bankruptcies, judgment liens, just late payments, certain things that's on there, contact me, because I can definitely be a great resource. If you have clients in which you need to provide assistance for them as well, I can help you as well. So if you have any questions, please feel free to reach out, guys.
Shay, that was, this might be one of the best Wealth Mastermind sessions we've done. This was jam-packed with great information, and I will reiterate, guys, if it wasn't aware when we started, you should be aware of it now. Shay really knows her stuff, and if you or your clients need help with this, please reach out to her. And Shay, thank you so much for being a great example of our culture and helping all of our agents get a little bit sharper today.
Yeah, no problem. I'm honored to even have the opportunity to talk to you guys. So thank you so much for having me. Thank you so much for even thinking about me as being a resource. You know, I appreciate you guys for listening. I hope this was informational, as informative as possible, you know. And again, if you guys have any questions, I love doing this. I love talking about it. And I'm here as a resource for you guys.
You're the best. Thank you, Shay. Have a wonderful day. Everyone, go forth, get better credit, and do well in life.